Okay, everybody, here we go. It is me, Gregory Mannarino, Tuesday, July 11th, 2023. And here we go again. No surprise, I don't think really to anyone what's happening here. Bond yields around the world by obviously some kind of a miracle. It can't possibly be central banks intervening here. Are buying debt, and bond yields are dropping here in the United States. Just 3 days ago, the U.S. 10-year yield was 4.08. We are now below 4% at 3.97. This started yesterday, where the MMRI started the day at 260. We are now almost back at 250. Again, global bond yields dropping, 10-year yield falling precipitously in just a couple of days. This is not normal to see this kind of action. The relative strength of the dollar is lower, and wouldn't you it's also a miracle as well. Stock futures are higher. Again, this is the game. This is what they do. All right, whatever. It's not going to stop. Again, this is a presidential selection cycle. The new president has already been chosen, as we all understand. And they have to keep the market propped up. It's the illusion of the market that, convinces many people that the economy is strong, and there is no connection, none at all, zero. Here's some interesting economic news here. First of all, mass layoffs. Do you remember earlier in the year, corporate layoffs by the tens of thousands? Well, it's starting again, and no surprise again to those of you that follow this blog. They're not done. The major corporations are preparing for a severe economic downturn. We have never been here before, with the yield curve remaining the most inverted it has ever been in history, a clear sign that things are bad and about to get worse. Do your own research on this. I've explained to all of you, an inverted yield curve, again, we've never seen one like this, has preceded every single recession since 1950, and this one takes the cake. With regard to forward-looking economic indicators, every one is negative, every single one. But meanwhile, you're supposed to believe everything is fantastic. So on the back of mass layoffs, which we had earlier in the year, we're getting a lot more now. I think this is going to accelerate. We're finding out, and this is going to be a real shock to you. Are you ready? I hope you're sitting down for this one. So banks are making it harder. Banks are making it harder for small businesses here in the United States, and I would imagine this is a global phenomenon, to acquire credit to function. Well, why would this be happening? That's really the truth behind what central banks are doing. The actual reason why central banks are raising rates has nothing to do with controlling inflation. We've been hearing this storyline now for months and months that, by raising rates, our inflation was miraculously going to get better. No, it's continuing to get worse here. It's to cut off the availability of credit to small businesses and the consumer. I've outlined this for you since day one. And here we have, this banks are making it harder for small businesses to, I'm laughing, but it's pathetic, to acquire credit. They're fulfilling the corporate agenda. That's what's going on here, and you all know that too. I tell you, people, there's some sick things going on. Now, how about this? Sovereign wealth funds. How many of you even know what a sovereign wealth fund is? How about I tell you what it is? These are state-owned investment funds. So state-owned investment funds are now repatriating gold. Why would they be doing that? Central banks have been repatriating gold. Nations have been repatriating gold for quite a while now. Again, it's a setup for what is coming. And I think it's pretty freaking obvious. You should be repatriating gold too. Silver more specifically. You all know that. What have we covered here over and over and over again for years? Bet against the debt. Become your own central bank. Mimic what sovereign wealth funds are doing. Mimic what central banks are doing here. And that is, again, holding gold, holding more specifically silver. Again, this is not just tradition, although we were sold that lie too. Do you realize that we live in an environment where the lies keep getting bigger and bigger and bigger? Ben Bernanke saying, oh, central banks hold gold for tradition. That's the only reason why they hold it, because it's traditional. Really? Honestly, no. They hold it because they understand where we're going. This whole thing, this debt market, which continues to get propped up. Again, who's buying all the debt? Understand how this works. I know you do if you've been with me for any length of time. How is it that any central bank can keep rates low? Did they just say, hey, everyone, you know what we're going to do? We're going to keep rates low. They can't just say it. They have to get into the market and do it. They have to create cash out of thin air, add digits to a screen, and buy the debt. And that's how they keep rates low. And that's what we're seeing. Again, it started yesterday with the 10-year yield starting to drop. Now, here in the United States, below 4%. It looks to me, clearly, like the Mannarino market risk indicator is going to drop below 250. And we might even drop below 250 today. And what is that going to do? That's going to make the market spray its shorts all over the freaking place. And of course, stocks will gain. That's the mechanism. Rate suppression pushes cash into the stock market, period. Inflates the stock market bubble, reinflates a stock market bubble. That's what we had since when the market crash of '08 here. They reinflated that. They reinflated a real estate bubble, created distortions that are so big that I can't even get my head around them. And I think about this stuff constantly, people. And the price to pay for this is going to be on a biblical scale here, a biblical scale, because again, they're already telling us what they're going to do. They're going to starve us, all right? Food scarcity, shortages, resource issues, all the stuff that you and I have known for like, I don't know how freaking long. But it's in our face, pretty much. Now, looking over at this market, on the back of the 10-year yield dropping, on the back of the MMRI falling, last time I looked at it, we were 151.6, okay? The market is slated for a higher open. In other words, we're going to build on yesterday's gains. Yesterday, just to put this into perspective for you, was the first day since the MMRI crossed 250 that the market put on a gain. It was also the first day that the 10-year yield started to drop as well. You see the correlation here? It's very, very difficult to deny it, although there are detractors to the MMRI. I don't know why. You look, no tool like the MMRI is absolutely perfect, but it's pretty damn close if you ask me. I think it's the best risk indicator that is out there today. Seriously, stock futures are higher this morning. Crude oil getting bid higher. Crude oil will be. Let me just go out here on a limb real quick. All right, in a relatively short period of time, crude oil is going to be $80 or higher, all right, in a relatively short period of time. Commodities, people, how do I stress this to you another way? Commodities are the place to be in this kind of an environment. Suppressed rates have caused cash to move out of commodities, especially gold and silver, which is already, we understand it's rigged anyway. JP Morgan having the lion's share of derivatives here with regard to silver. They rig the silver market and they pay fine, they pay another fine, they pay a fine on top of that, and it's all fine. Bad boys over there, all they do is pay fines. It's the cost of business here. They understand that. But again, you know my take on this. Commodities are where you got to be. With regard to Bitcoin and cryptocurrencies, I personally sincerely believe you need to have some of this in your portfolio. In my opinion, the big cryptos, especially when this thing really gets going, they're going markedly higher. But what's Greg's favorite asset of all time? Physical silver. I think it's definitely the most undervalued asset on the planet based on what we are seeing here. The pumping going on here in the debt market is simply beyond anyone's wildest imaginations. It truly is. Gold and silver right now are mixed this morning, relatively flat. Cryptocurrencies under some pressure this morning. But that's where we stand, people. I mean, honestly, how much of this is shocking to you? How many of you are surprised to find out that banks are making it harder for small businesses to acquire credit? Businesses generally function on the back of their availability to acquire credit. But if you cut that off, well, these institutions die. It's to fulfill the corporate agenda. This is not the United States of America anymore. This is the United States of corporate America, where power is being consolidated in fewer and fewer organizations. The banking system, forget about what's going on over there. You already know this, and it's going to get a lot more dramatic moving forward, especially when this corporate real estate issue starts to rear its ugly head. And it is freaking ugly. So more layoffs, more corporate layoffs, waves of it are coming. But they're going to tell you how great everything is. And Bidenomics is working. It's creating a lot of jobs. You know it is. Do you know how you know it's true? Well, because he's telling you. Thing is telling you that, it's Bidenomics is working. Yeah. Bond yields dropping around the world. 10-year yield below 4%. Imagine my shock. Imagine your shock. I really want to see your shocked face. Shocked. All right, people, look, I'm out of here. This guy here loves you a lot. I mean that from the heart. I will see all of you later, 1:05 p.m. Pacific Daylight Time for my live stream. Please have your questions ready for me. Let's put this together. Anyway, I'll see you all later, okay? That's it.